Okie dokie, good morning, everybody. It is Thursday, December 19th. We're going to go ahead and take a look at what happened here yesterday. I'm pretty sure anyone who's been in trading for even a day knows what happened. Really big sell off, whole lot of volume. So let's take a look at what happened coming into the open. Again, we were in the back and forth chop, that 60-point range for 2 weeks. And like I told you guys, could go any way. We did have FOMC, so might have been smart to be careful in the morning. Maybe trade after the announcement, and once the Fed chair started talking, that's when it really started to get sexy. So let's take a look. So out of the open, they hold the roadmap level to the tick for the pullback, basically a fast moving average, right? Holds that, pulls back, and we get the bounce just a tick or two in front of the major scaffolding level, right? Which has, as you can see here, over the last day and a half, has basically been a very strong support, right? So they came in, they bounced just in front, and then we got a nice little bullish follow through from there. Basically, every pullback to the fast moving average, you should have made money on the way up, right? So if you did try buying on a pullback, great opportunities to the upside. If you did try shorting the back end of VWAP, because we were in somewhat of a bearish pullback, at least on this very short time frame, and you tried it, fortunately didn't work, right? So I actually got stopped out right here. I wanted to get the first test, and I wasn't looking at the screen. I missed it. That was my trade right there. I decided like a moron, even though I told everybody to not trade until after FOMC, I decided, oh, let me just throw a trade on to see what happens. And stopped me out, right? So it pulled back and then just went right through. So, and I knew, I said this to myself when we came in, I said, hey, we are right in the middle of the range. We're at FOMC in the afternoon. I probably shouldn't be putting a trade right in the middle here off VWAP because they're probably just going to go right through it, right? And that's exactly what I thought. And I still made the mistake of putting the trade on after I missed the entry I wanted, and I lost, right? So there's a great lesson for you. So a great opportunity to be on the long side, not the short side, right? And every pullback to the fast moving average would have given you, again, very limited risk for that push. And then we pulled back basically right off the highs of the overnight there, right off of that roadmap level. And then they even came right back to it. And there's a reason that our roadmap level is at 46. It came right back. There's the bearish divergence. Let's zoom in here. Bearish double top. There's the bearish divergence off our level, and there's the pullback. So great short opportunity from up there. And then you can see, so it was wonky, right? It was kind of back and forth inside of here, just building some value, if you will. And then at some point, this is where everything started to show its face. So we got the pullback. It chopped around coming into the FOMC meeting, right? This whole area in here you shouldn't have been trading, right? I should have never taken that short yesterday at that point, and really shouldn't have been trading in here. If you did, like I said, there were some good holds here and there, but it was kind of back and forth. And then finally we get the FOMC announcement right here. This is that big jump, right? Kind of comes down. Shouldn't have been trading, like we shouldn't have a position open at that point, right? Unless you were short from all the way back off 61.46. Again, basically the high of the day being our roadmap level to the tick. They did peek through it, and then bam, and that began the beginning. So if you were short from up here, good deal, but I wouldn't have been trying to get in at the announcement, right? A little too volatile for me, could have jumped my stops, etc. So it comes down, interestingly bounces at the scaffolding level, and then rejects in front of the support and resistance. And then we begin the big journey down. So what do you know? You get the tag of the back end of the first roadmap. Actually, it was here, but they didn't touch it to the tick. It rotated one tick in front and then came down, and then there's that next tag. It was a big divergence when that was happening. So if you were noticing extreme volatility to the downside, you see your bearish divergence off the roadmap level, well, there's a trade opportunity, limited risk. And if you caught that, you caught the whole sell-off as well, right? So great opportunity there. There's the tag of the fast moving average with major divergence where I got in. So I got short here and got a pretty nice little trade off of that. And I got in a couple places as this thing sold off. I remember the tag of that because look at the divergence there as we came into it, right? I knew that we might come back up here, but we had tagged it first, and then I was going in for the FMA. Kept going, right? They bounced just 2 ticks in front of the next roadmap level here, only to come right to the 200 with a double top bearish divergence roadmap level for the continuation. So I got in over here, and then there was one other spot. So I was able to redeem that loss that morning, yesterday morning, and make a whole bunch of money on the way down because I had runners and I got in a couple times. I have 2 main accounts I was trading in, and then it just kept going, right? And I was out after I got my 17-point win on these trades, so I wasn't holding for 50 points to the downside. If I did, then maybe I would have made enough money for a yearly salary, right? It just was just extreme, never really came back to all the entry points. And this is what makes it so difficult for trading in this type of environment, because you see the market just going and going and going. So then you go, oh, let me get in short, and then the market comes back 10 points and then goes right back down to where you wanted to get out, right? So you're watching this fall, and you're going, when do I get in? When do I get in? And sometimes you can just rush in and get in and even try the back end of a roadmap level like here or here and get stopped out. And then next thing you know, you've got 3, 4, 5 stop outs in a row, and you can start to go off the rails. You might say, you know what, I'm just going to double up. I'm going to capture this continuation and I'll be fine. And then you lose. And next thing you know, your account is blown out, right? So, but this thing just kept going and going and going. You know, if you did short the back end of the roadmap levels, there, here, right? You would have been in, you wouldn't have taken any risk, and the trade should have just kept going and going, depending on how far you wanted it to. So, you know, just looking at this, zooming out, looking, you know, holding the back end of the 200 every time it tested the 200. These are the trades that I teach. I teach you to wait for the market to come to the 200 in a downtrend, look for the divergence, and take that trade, right? So here's that setup right there off the 200 and the roadmap level, right? Then we come down. Even here, we get this double top peeking into the 200. This is not like a whole breakout through it. And there's the double top with the bearish divergence. Bam. Pull the trigger. Even if you don't get filled till down over here, you're taking on 2 points of risk from the high. And then there you go. Here's another one. Now this one I don't think had, yeah, it has the divergence as well. All right, because we peaked up to new highs on RVI, but the price actually came back down. And then finally, you wouldn't have seen it close, but you would have seen the beginning of what is the divergence there. And then it starts falling, you get in, it never came back, right? So these are the very trades I teach. They're very simple. They don't work every time, but you know where your risk is. You know you're wrong within 2 points of a break of that level, and you know it could go 50 points, it could go 5 or 10 points, and you should be able to make money. Now, again, it doesn't work every time. That's why you take small loss, small loss, small loss. Maybe the next one turns into a 17-point winner, right? So that is the name of the game in trading. It's all about keeping the money you have so that you can fight another day. And so it just kept going, kept going. Here's another couple plays off the back end of the next roadmap level, bunch of bearish divergence. You know, there's your double top. There's the major divergence, right? If we come up into a price that we hit before, and you have this major divergence, and then the price starts pulling back again, well, if it's a very heavy market, beautiful opportunity. You know where you're wrong. You're wrong from that high. So you could literally put your stop 2, 3 ticks above it just to be safe. and you know exactly where you're wrong, and you know you could go for 5 times your risk, 10 times your risk, 20 times your risk, and sometimes you will get that and have a 40 to 1, reward to risk. It's not unrealistic. So kept going. If you can't tell, I had a pretty good afternoon after the emotional baggage of realizing I did not do what I was supposed to do in the morning, right? Kept going. Here's another beautiful bearish divergence off the back end of the roadmap level. You got yourself a nice 10-point trade to the downside, 11, 12 points, right? Now, does it work every time? No, look right here, guys. We came up into a roadmap level. We got a bearish divergence that started to form. Looked really good. We even started to get a red candlestick, and then it went right through, right? So it's not like I'm showing you just cherry picking things. I'm just showing you that when these trades work, they work with very limited risk, which is the key thing here. Very limited risk. Kept going. Just riding that fast moving average, holding the back end of these roadmap levels all the way down. Let's see. Well, eventually we came down, and the low of the day was our roadmap level to the tick, right? So kept going. We got to bounce about a point in front of this roadmap level, came up, stepped up the levels, could barely get through 59, 77, 75, right? Held it first time with a bearish divergence. Let's zoom in on that. Held it for that double test with bearish divergence. Should have known to take profit right in front of that 200 moving average, maybe even more safe to get it at the 70 in case it bounced out. But you should have been able to make just a little bit scalp out of that, right? That is actually 77 to 67. Wow, that's a 10-point pullback, guys, right? So you could have made money on that first test. Then it just kind of peaked around for a little bit, and then the continuation hit. So it's still held there, but we did go ahead and peek through it a bit, right? So there's just endless opportunities to get in an area that makes sense with limited risk, and you have to accept that sometimes you're going to take 2-3 losers in a row before you capture that 15-point push. Kept going, and then here's the low of the day. Like I said, we captured the low basically to the tick, which is kind of par for the course with the S&P Roadmap. We seem to be nailing the highs and the lows to the tick pretty often. But there you have it. There's your bullish divergence off of the lower level there. There's even a divergence right here between all these little lows, and there's a divergence in relation to that previous swing low, right? Big divergence there. And then the divergence inside of there, right? So that was a buy signal in a very heavy market that turned into a 0 tick risk. And now how far up are we coming into today? 60, 70 points. So like I said, it's very realistic to get in on a trade, have less than a point of risk, and make 50 points on it. Now, we're not going to have these type of conditions every day. Obviously, it's kind of the exception more than the rule, but it is possible. And we're gonna, once we get into the Trump the reign, which is coming up here in January, going into February, the market, if you guys remember, just a couple of years ago when Trump was president, was moving like this every single day, right? And it was going 50 points down, 100 points up, 200 points down, 200 points back up. So we're probably going to have a lot of opportunities coming into 2025 where we have, again, a setup like this, a setup like the high of the morning, right? Let's go all the way to the high of the morning and look at the setup, which had 0 risk right there and went hundreds of points lower, and then go to the low of yesterday where we had 0 ticks of risk for a bullish setup, and now we're 70 points up from there, right? And you have plenty of opportunity in between all the big moves to go ahead and scalp around these levels back and forth, right? We've got the same setups happening off these levels all over the place. Now, I got a trade this morning. I thought it was a little bit more of a risky trade given where we were in the chart here. But this morning, I went ahead and got long right here. And I got one tick of risk. I got in at 59.85 quarter. There was my first profit. I'm trying something out where I just take a quick 2 points, a quick $100 out of the market, because over 90% of my trades go right to 2 points. I have a lot of trades that will come up 3-4 points, miss my 5-point target, and then come right back and I don't make any money, right? So I've been trying this 2-pointer and I'm watching my accounts grow so much faster now, right? So I was able to get in at 85 quarter, take it out at 87 quarter in 2 separate accounts, make a quick $100, and then I got my 5-point fill. The only crappy part about the trade is it never got to my 10-point fill. So I made 7 points total, and then it turned around. So anyway, guys, I hope this is helping, sharing how I think and where I've been trading and why this stuff is so powerful. And you just have to remember that it's not necessarily about how much money you're making. It's about mitigating the risk, right? Holding on to the money that you do have. So there you have it, my friends. There's a bounce right off the 200 of a whole bunch of divergence. You took 3 ticks of risk, and now you're up over 5 points already, right? Right in front of our eyes. So I'm going to get going. Be careful out there. And just don't forget that we are in contract rollover. Wonkiness is par for the course. So we'll leave it at that. What a nice vid in main chat. Oh yes, that video, guys. Hopefully I'm not interrupting your trading at the moment. Maybe someone jumped in long here because they see what I'm seeing. But there is a video I posted in the main chat. So if you go into our community here, go up to the main chat, and look at this video, how I reprogram myself to make $715,000. I think he brings up some really good points in regarding the emotional side of trading, because pretty much everything he said are the things that clicked with me, right? And when I stopped worrying about trying to make money every day and I just started putting trades on where they made sense and letting them play out and closing them when they didn't work out, that's where things started to work out. Of course, it's never going to be perfect because there's always going to be a situation where you're in and you're going to second guess yourself, and that's always hard. But it's controlling yourself, understanding you don't always have to be trading. When there's good opportunity, of course, you want to be trading, but setting up a system, being able to walk away if you take a loss and not worrying about, oh no, I got to make it back. Because when you start to think like that, I guarantee you that's where you're going to go off the rails and you're going to blow out your whole account. You spend months building an account and give it away in one day. It happens to the best of us. So, I am not the best at elucidating this information. So that's why I share these videos with people who can sit down and explain it to you perfectly. I'm just not great at that. So check it out. And I will see y'all when I see you, probably tomorrow. Take care.